According to this on-chain data over here, it's not obvious that we are already out of the worst. It's not obvious that this bear market is over. Have a look at this. It shows the relative unrealized loss over time. And at the end of every bear market in the past, we tended to go all the way up to 60%. But this time we only went to 20%. This time people have realized their losses much earlier. It was not really a shock to most people's portfolios. Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago, and in this video I want to share the on-chain data that personally helps me to time the cycles. On average, I have outperformed buying and holding Bitcoin by 2% per month. That's then how that looks like over time, and this is the monthly chart. Yes, some months I'm underperforming, others I'm outperforming. In the end, the long term matters. There's also copy trading available, so feel free to check that out in the pinned comment down below. Now, when we look at the net unrealized profit and the net unrealized losses, we look at that ratio, then in the past, we tended to always get into net unrealized losses at the end of a bear market. That was true in 2018. It was also true during COVID in 2020, and it was true in 2022 after Terra Luna and FTX collapsed. It is not true right now, though. We have not yet gone into net unrealized losses. The average Bitcoin investor still to this day is in net unrealized profit even after all of this price decline. Now, there are different ways to look at the average cost basis of the market. For example, in red we see the average cost basis for all the traders that trade Bitcoin between the last 1 week to 1 month, and the line in orange is the medium-term traders, everybody that held Bitcoin for 3 to 6 months. The very short-term traders, they are in unrealized profit. The medium-term traders, they are still in unrealized losses. The overall market though, the realized price across the entire market, that's still in profit. And again, historically, we tended to be in unrealized losses in the past. The average cost basis right now is at $54,000. Now, I'm not saying that we have to go all the way down to those $54,000. What I am saying though is that there is still some risk. If you get some kind of external shock, let's say AI stocks suddenly go down, let's say we get a real political crisis, let's say a banking crisis, a black swan event nobody anticipates, and there's some kind of spillover effect from traditional finance into crypto. When the momentum changes, those could be the price levels that become relevant. That's the potential risk we currently take. It's even slightly worse because this is the realized price across the entire market. When we look at the long-term holder realized price, that tends to go a bit further away from the price, so it tends to adjust slower. But in the past, at the end of every bear market, we also fell below that price level, and that's currently at $48,000. That's probably really the cheap price, especially if we get a quick sell-off compared to COVID, for example. There we only went below that price level within the day. Now it appears as if Wall Street continues to buy, or let's say the retail investors that buy through Wall Street. This is the inflows and the outflows from the US spot ETF market, the exchange traded fund market. If you buy IBIT issued by BlackRock, then you're part of this chart. There are times when we get outflows from the ETFs, but recently, since the end of February of this year, we tend to see mainly inflows, and that's also when the price of Bitcoin tended to trend upwards. The spot volume from and to Coinbase tends to be a bit more volatile, but also there's rather inflows now than outflows. Now we have looked at the very long term, what happens with Bitcoin on chain, but in the short term it's actually not the spot trading that makes the price determination. It's rather the levered bets on the price. It's the perpetual futures. That's true for most smaller cryptocurrencies. It's also true to a degree for Bitcoin. Now what's noteworthy is that on October 10th of last year, we had a massive mispricing event. That's over here. That's when the altcoin market in the span of a few hours crashed by 48% to then subsequently quickly recover. The market makers made a lot of money during that time, but most retail investors lost their money, especially the ones that were betting on rising prices. If they had leverage beyond 2x, they got liquidated. The impact of that event though seems seems to now have been digested. Check out the Perpetual futures funding rate for Bitcoin over time. It was massively negative in the last month of 2025, but since March of this year, it's improving. There's now a positive funding rate. So that means the people that are currently betting on rising prices, they pay money in order to do so. The short-term traders tend to be rather bullish. Now, what about me? Am I bullish here? I'm cautiously optimistic. I am currently betting on rising prices, but I am prepared that in case we do see a sell-off, that I'm exiting very quickly as well. So I still keep this here on, the bear costume in the background. And the reason why I don't turn that lamp off just yet is this here. This is the stablecoin market cap relative to the money supply in the US. When this is going down, we see outflows from the crypto market. When this is going up, we see people depositing their hard-earned fiat currency into the crypto ecosystem. Unfortunately, since October of last year, this is just going sideways. So no new money is entering the space. And that's a problem, right? How can we see sustained higher prices if there's no real money flowing into the space? Yes, there are the ETF flows. There is demand by Wall Street directly, but we will definitely not see an altcoin season without any capital inflow into the stablecoin space. And so in the worst case, we see the stablecoin dominance going up from here. This is how much all of crypto is currently in stablecoins. When this is very high, people are cautious. A lot of money is on the sidelines. When this is very low, people are rather risk on. And since November of last year, this is going up, which is depressing crypto prices. What we see here at the bottom, that's the Bitcoin price. A bottom signal would be much more clear if we were to hit 16% in stablecoin dominance again. That's when we historically bottomed out in the market. Unfortunately, currently we are only at 11%. Many indicators show that there is still quite a bit of risk and that historically the bear markets were way more severe. I'm not saying that we can't turn around, but whatever positive momentum we currently have is still very fragile. And we have to always remember the worst case. We have to have proper risk mitigation in place. Be this by not being allocated to the asset class too heavily, or be this by using stop losses, for example. Again, if you want to follow my journey on how I time the market and what kind of trades I do, feel free to check out the premium membership. Link to premium is down below. And if it's your very first time here, feel free to subscribe as well. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.